Hey there, pro traders, and welcome to another Monday market review with GoPro Trading Academy, being held as always by yours truly, Ian Giffen. Right, folks. So, as I warned you last week, to be on the lookout for a abrupt ending to the very strong bullish market we had across our yen crosses. In other words, showing yen weakness. That certainly did happen last week, and we had a pretty sudden pullback, which knocked us out of all of our longer term trades with trailing stops, giving us some really nice wins there. I mean, we had an 8-to-1 winner on initial reward to risk ratio. So we're pretty pleased with that, but we did get a few losers with trying to get back into the market when in actual fact it didn't carry on going. And that, is the name of the game. But by the same token, we also had a perfect market then for our overlay strategy, and we managed to basically pull back most of any of the losses we made when the market failed to continue on those. But in the case, I'm jumping the gun a little bit. That is the overall theme, though, of last week. We did see some other instruments giving us a few options for trading. Particularly, we had a couple of hybrid opportunities that triggered, and I'll show you some of those. But let's start with the euro-US dollar on the weekly chart. And you can see it's gotten a bit choppy now. Last week with this bullish high test or inverted hammer giving us what is potentially a ringed low or a ringed high. We don't know yet. But because it's an engulfing candle, I've moved my analysis forward. But this may well give us a bearish continuation, in which case I'll just need to backtrack this analysis a little bit. But that's fine. We'll wait and see if that happens. If we get a lower low any time through the course of this week, when I say a lower low, lower than the preceding week's candle or last week's candle, then I will do exactly that. This is what it looks like on the daily time frame. And certainly it came and tested well inside our preceding LPO channel. And of course, our HDC resistance level was temporarily broken last week. What was that? Wednesday, I think it was, where we had an outside close or close outside the HDC channel. In other words, for a very short space of time, this resistance level was in fact violated, but it pulled back with this bearish engulfing candle on Thursday. And you'll notice that, and I've discussed this many times, how this alternative form of resistance in this case, which is a dynamic form of resistance, proved to be the ultimate resistance level where the market turned around. So we've spoken about that in our mentoring sessions as well. It's something that you've seen me add to many of my charts. And in this case, it's a perfect example. But look, apart from that, there hasn't really been anything on these time frames for us to do on the euro. There have been some opportunities for those folks who are trading the significant lower time frames down to 5 minutes. The 5-minute chart, there was some good opportunities last week, and I think we had a couple of small winners this morning as well. All right, so enough of the euro. Let's move on to the cable, where we've still got a valid class 1 M pattern here on the weekly time frame. So for those folks who are looking to trade the daily impulse, well, we actually did get an entry, and I think we may have discussed this last week. That was what we were looking for. So I think it was the close of Monday, in fact, where we did actually take a short on this. And well, we've been able to trail the stop, obviously, but for the rest of the week, it didn't really do much. And at the moment, we're pretty close to our original entry. So nothing really for us to do there at the moment. But if the US dollar strength does continue, and it may well after non-farms last week, then of course, we will it'll be happy days for this trade, but we don't rely on that. So moving forward to the first of our yen pairs, being the dollar yen here, on the weekly time frame, we just had that inverted hammer for the week, looking like this on the daily time frame, where that pullback is very visible. So here we have the end of a very strong extended phase 1 or impulse wave. Does it mean that the trend is over? Absolutely not. It doesn't mean that at this point in time, because cyclicity has not yet broken down. Now, it may well do. We don't know, and we don't look to second guess the market. But if we do get a higher close from a price action point of view, that will mean that we do have a resumption of this trend. Whether it remains strong or weak is another story. This is one of the instruments that we looked at for a hybrid. You can see where we had the breakdown of the cyclicity within the wave on the daily time frame. So the wave on the daily time frame being a trend on the 4-hour time frame. We saw the cyclicity break down here. And we've had a few like this, by the way. This is not the only one. We took a few. And well, at the moment, I'm sure that on the actual trade itself, the stop has been trailed significantly more than this. And it helps if I use the right key. Right. So what would we be looking at? Using the 3-6 rule, we would certainly be, we are at break even on this trade. All right, so anyone who took that, you're in a risk-free trade at the moment. If you're using the standard targeting, it's not a massive trade, but what a lot of people do, of course, is also look to target the preceding resistance level. So a decent reward to risk ratio, but we've got some others that are looking a little bit better than that. And of course, if you're using advanced targeting, you won't be worrying with the take profit at all. Dollar Swiss, nothing doing for us, so I won't waste your time on that. Look, there's a potential still for a class 1 M pattern here, but if we get a close anywhere above that low at the end of today, well, that will mean that that condition has been violated. It will be a class 2 or potential class 2, I should say. USD CAD last week, nothing happening really. We're inside the channel. We don't have a valid pattern on that time frame. And here you can see how on the daily time frame we've had a breakdown in the sequentiality of cyclicity here. So if you were, not that you would be, but anyone who had taken a trade in this would potentially be looking to use an overlay. But of course, given the higher time frame conditions, we're not worrying about that. So dollar CAD we can safely move past. Likewise, the Aussie and the Kiwi did very little last week. You can see we've got a bit of a doji there. Breakdown in cyclicity, I think we discussed before. If not, very clear breakdown in sequentiality of cyclicity. So that previous trend or potential trend that we had has broken down, and I did that pretty early last week. So we didn't do anything else with that. We did have an H4 impulse on this, which ultimately got stopped out where it may have been there. In any case, certainly by the 28th of or 29th of the month, that trade was dead and buried. And you can see how the market has really just gone sideways ever since then. So nothing to worry about. Kiwi, similar thing here on weekly time frame. The difference being, of course, as we know that we have been looking at this class 1W pattern. So for those folks who have been trading that, you may well have taken a daily impulse over here. If you did, you're still in the trade, but at the moment, again, the market really is just going sideways for both of these pairs, and nothing else for us to worry about there at all. Euro yen. So here we get into our other yen crosses, and you can see again another high test here on the weekly time frame. That wave is still very much intact, and that wave, of course, being a potential trend here on this time frame on the daily. So here we've still really just got a pullback. Friday gave us an inside bar, inside candle. Nothing happening today so far on this Monday, but it could well give us a bullish resumption on this. But until it does, we're biding our time. So if you wanted to look at this for a potential hybrid, it's come close because we have had a breakdown in cyclicity here late on Friday. And of course, we wouldn't jump into a trade necessarily at that time. But again, nothing's been happening since then. And we didn't have the final condition met either with the bullish impulse candle in this time frame. So haven't done anything there yet. On the GBP yen, the Twisted Sister as it's called, we've got a similar picture, but a little bit more bullish, where we can see that the phase 2 or retracement wave on the daily time frame has in fact come to an end. And of course, that's represented by a breakdown in the sequentiality of cyclicity again. We actually had an initial attempt at this one. It got stopped out. It didn't work out. Then we had a second one with a very tight stop. And of course, this one is also at break even already. So, we've got nothing to lose on this one. And given the fact that we had such a tight stop, it's quite a highly leveraged trade. I think we're already over 3-to-1 reward to risk on this. And if we're using the trailing stop, and this is we are, certainly we already have enough profit locked in to pull back on that preceding loser. This is also an illustration of how we actually had the best of both worlds on GBP yen last week, where we had several H4 impulse trades hitting take profit. That last push up here took out our last one, but we did get another setup in this area over here, which was taken, another bullish setup on another H4 impulse. And of course, that one didn't work out. And as the cyclicity broke down, we shorted the market with an overlay, and that gave us almost the full win. So it clawed back well over 90% of the loss on that one trade. So if we want to add that up, we had about a 1.8 to 1 winner here. Well, one of them was close to 2 to 1. Let's call it 3.5% total. Lost a percent there, gained back 0.9. So, you know, we're looking at about well over 3% that we made, if you're risking 1% per trade, that we made on this instrument last week. So that was a good one. That was one of the best instruments that we had through the course of last week. Swiss yen, here on the weekly time frame, again, just that strong, it's all the same picture really, that strong bullish wave. And here's the trend. So this one's similar to the GBP. We've got the phase 2 or retracement wave having come to an end at the end of Thursday when that low was ringed. So dropping down to the lower time frame, again, we had a very nice setup for a hybrid, very, very clear setup. And there we go. We took that on Friday. This stop by now, it came quite close to the stop because by now we would have trailed this one to break even using that 3-6 rule. Now, of course, we don't know whether the trade will actually survive, whether it'll make it. If, however, and let me just go back to the daily time frame. If, however, we do get a bullish resumption in this bullish trend, if this really does continue north, then there shouldn't be any real difficulty with hitting that take profit. Or if you're using the advanced targeting for scoring another really, really nice win. But at the moment, let's face it, it's pretty close to our take profit. I mean, our stop, I beg your pardon. So if it hits that, we won't have lost anything. It was worth the effort. One thing I should have pointed out there as well, let me just go back to that chart, was the fact that we also had an overlay here. Again, an example where we had multiple winners whilst we had that trend running, depending on what targeting mechanism that you used based on what I've taught you within the academy. You should have still scored extremely well, no matter which mechanism you used. But there was ultimately a final trade that we got into here that also ended up being a loser. And we weren't able to trail the stop on that one at all before it got stopped out. But with that breakdown in cyclicity again, it was a perfect setup for a bearish overlay. And given the 2 candle rule, actually went straight to the take profit. And we had the full winner on that one. So the net between these two ended up being pretty much close to zero, even including the trading costs. So happy with the overlay doing its job in that particular situation. And hopefully you folks who are trading it can see that that is exactly the right time to trade an overlay, is at the end of an impulse wave and a trend. Right, so here again, CAD yen, similar picture, more of a pullback because that inverted hammer is more pronounced. But likewise, we have had a low ringed here at the end of last week. And that means that technically this bearish retracement wave is over. And that retracement wave on the H4 time frame looking like this. Again, a breakdown in sequentiality of cyclicity. Using that 3-6 rule of ours, we are in fact still in the resulting hybrid trade that we took here. So 1, 2, 3, 4, 5, 6. So you'll notice that that in fact would have been the next stop level for us to use. And then if this closes higher, we will be at break even. So we're almost at break even on this trade, but with a higher close at the end of this 4-hour candle, we will be able to move that stop into a risk-free position. Just checking again, also another example of an overlay, another one where, although it's not being reflected here, I'm not sure, because we didn't take all of the opportunities. We don't over leverage ourselves across a single currency. In this case was the Japanese yen. But we did take a lot of these follow-up setups, and that didn't work out. And of course, it was the overlay strategy that really saved us at the end of the day on those. So another very nice, easy overlay trade that went straight to the take profit. Right, the last two of our yen pairs. This is the Aussie yen, another one where technically speaking, we are back into the next impulse wave of this trend. And looking at that on the H4 time frame, we didn't do anything with this one, but another opportunity potentially to have gone long. It would have been actually this morning. So this over here is a perfect setup for a hybrid. We didn't take it. I think we overexposed now to the yen, but another good setup to go long with a bullish hybrid on a yen pair. So apart from that, nothing else. We didn't do much else on this particular one. But you can see that the picture across these yen crosses is very similar. That's why I like to keep them close together, so I can do the analysis of them together. And here, the final one, Kiwi yen, another similar picture, a bit messier with these inside bars on the daily time frame, dropping down to H4. You can see really this one has been going very much sideways. And another one that we haven't really done anything with. Right, so let's move on to our euro crosses. Not that there's that much that we need to talk about here. Euro GBP, we haven't touched for a while now. It should be pretty clear as to why. We did get that breakout last week, but it flopped back inside again. So nothing of interest to us there. Euro Swiss, likewise, very messy. Here on the weekly time frame, you don't even need to drop down to the lower time frames, but here we are inside of that HTC channel, no valid patterns, just going sideways. That HTC will just tighten up over time. Euro CAD, on the other hand, we are, well, technically we could, in fact, progress this with a bullish engulfing candle, similar to what I discussed on the weekly time frame for the Euro USD. But I've left this one as is. It is a bearish trend in this particular instance. So we are interested in a potential resumption. You'll notice that our hybrid got stopped out at break even here, which is a bit of a shame. But for those folks who are trading the daily impulse, you should potentially have shorted this again with when was this the end of Thursday. So maybe you wouldn't have because of the employment numbers coming out on Friday, but if you had, let's just double check this 38.1 the low. Yeah, so this was very much a setup to short the market on a daily impulse, and had you done that, the trade will be should be running quite nicely, obviously, with the market showing some bearish momentum. And let's see if it can break through that support level. So that's Euro CAD, Euro Aussie, a similar picture, obviously. So here, weekly time frame, class 1M pattern. Last week's candle not having done much. Yeah, it's just it's a bullish candle. Market messed around, but I mean, this is what it looks like on daily, of course, with all it was a retracement. That's all it was. So technically, we're still in that trend on the weekly time frame. We had that previous phase 2 on the weekly time frame. We're still in a phase 1 or bearish impulse wave on this time frame. And again, another setup for a bearish daily impulse. So and this one's also going quite nice. You should have triggered that this morning. And as always, if there's a bit of a gap, I recommend that you put in that limit order to make sure you get the right price. So that one's going well. Euro NZD, a bit messier, but a similar picture, very much a similar picture. Here it is on the daily time frame. This one also just managed to take us out. A bit frustrating, of course, when this happens. On our hybrid, no loss, but you know, it was doing very well up until the pullback. In any event, we haven't had a setup as we did on the Aussie, Euro Aussie, to short this with a daily impulse. Been a bit messier, so rather stick to that one. Right, let's have a look at the GBP crosses now. So GBP Swiss, nothing doing here on weekly, bouncing off of that support level. And although we've seen the market gap, well, 3 times now, in fact, 3 days in a row, we've seen the market open below that. Really, that's just a sign of low liquidity at the market open. We have not had a single close below that support level, and that, folks, is the key. So again, nothing for us to look at the moment, If we do get a ringed high below that price point or without a close above that price point, then of course this does qualify, or it would qualify as a class 1M pattern for those of you who trade that. Right, but a bit of a neater picture here on the weekly time frame for GBP CAD with another bearish impulse candle, even though it's a low test, looking like this on the weekly time frame, daily time frame, beg your pardon, where in this case our bearish hybrid, or it may even actually just be a daily impulse, I think, has survived. Hasn't hit take profit yet. It is a daily impulse, I beg your pardon, but it's looking promising. We are at break even on this one as well, but we're having to be patient because now, well, if you take Monday, Tuesday, Wednesday, Thursday, Friday, and now Monday again, it did very little through the course of last week. But trading is a game of patience, so we just sit and bide our time. Right, GBP Aussie again, a much nicer picture than we saw in the Euro crosses. With this GBP weakness relative to the euro through the course of the week anyway, over the last few weeks. So on the daily time frame, trend very much now intact. We've had the some time ago we saw the break below that support level, and yes, we did have a pullback last week. So anyone looking to trade this with a daily impulse, Friday obviously didn't give us what we were looking for, but should we get a lower close, you can short this. We were also trading this one looking at the H4 impulse, and you can see how we actually have had a couple. One was a winner, one got stopped out at break even. So with that chop later into the week, as expected with the news coming out at the end of the week last week. So in any case, it's been profitable for us, and that's the main thing. GBP NZD last week bouncing off of that support level, as you can see, looking like this on daily. So it is bouncing off of that. We did actually hit our take profit on a hybrid on this one. We just managed to hit it. So I'm happy with that. If you're using the trailing stop on this, you may have been taken out also for a winner, but for actually not. I'm just looking at this now. You'd still be in the trade. Using advanced targeting, you should still be in the trade if you're using 2.5. Obviously, if you're using aggressive, if you're using the aggressive trailing stop, then well, this is the threshold. So if you use this as the threshold, then you may well have been taken out for a slightly smaller winner than with the standard take profit. But for those who are looking for a close below that level before they start trading, you'll still be in this trade. Right, so that's the end of our GBP and Euro crosses. Let's look at the other crosses. CAD Swiss on the weekly, not interested in this at all. Yes, there is a potential for a class 1W pattern here. But we've seen last week this resistance level being nicely respected. On the daily time frame, pushing up to that resistance level looked like that. We had one impulse candle through that push. Quite frankly, this has not been a major priority for us. We didn't take any trades on this. None of our, we had other fish to fry, basically, so not particularly interested in that one. Aussie Swiss, likewise, you can see here on the weekly time frame how we are technically still outside of the channel. After we had that breakout, we've had a retracement. This is more interesting because with this retracement, effectively what we are seeing is a phase 2 on the weekly trend. If we see a breakdown in this bearish cyclicity and a resumption in bullish cyclicity, this could well be a very tradable pair in a bullish direction. But at the moment, bearish cyclicity is still intact. Aussie CAD, nothing much. Look at this on the weekly time frame, last week's inside bar. And yeah, that's just nothing at all. Really not interested in that, of course. Aussie Kiwi weekly, we had a bit more action here with that outside close impulse candle and outside the channel. Now we don't have a class 1W pattern on the weekly time frame. We do have it here on the daily. So if you're purely a channel trader, then this morning you've probably gone long. And if we were to put it in the opening position, you've probably gone on this one, long on this one. You'd need to have used your ATR stop probably. If that's the case and we get a higher close today, you'll be able to trail the stock quite nicely. But that certainly is a setup for a channel trader. As long as you're not looking for a class 1 pattern at all or outside C closes on the selection time frame, that is very much a setup for a bullish daily impulse. Right, last two of our Kiwi crosses, if you like. So Kiwi Swiss, this is in fact the daily time frame, and you can see how there's been nothing for us over the last week. We've discussed that previous trade before that hit the take profit. There's a potential class 1 W pattern stacking up here. So if we do get a ringed low, then absolutely we can go with that, but we'll need to wait for the end of the week before we can look at that. So Kiwi CAD weekly time frame, you can see this one's not nearly as interesting looking. No cyclicity intact inside the channel, no valid patterns, and it's really just a mess here on the daily time frame. We've discussed the potential resumption before that just petered out, so nothing for us to do there. And that, folks, is pretty much the end of it when it comes to the currency pairs. And as you hopefully can see, there's a lot fewer trades than we had over the preceding 2 or 3 weeks. But still, the main lesson to be learned from this is the ability to stop what you're doing when market conditions change. Now, your rule set should basically tell you to do that. All you need to do is follow the instructions of your rule set. So as we saw the end of that very strong bullish activity across the yen crosses, we had a couple of setups, as you saw. There were several setups, in fact, that looked perfect, but ended up stopping out. First of all, it didn't take away the profit that we'd made beforehand. It put a small dent into that profit. And if you traded the overlay strategy, then you basically almost didn't lose anything from those reversals. And that's the power of an overlay. So it's all about being able to apply your rule set to the appropriate market conditions and have strategies for those conditions. Right, so let's have a quick look at some of the others. Gold, nothing much. It's just been a bit choppy. You can see here we had a sort of bearish low test on the weekly time frame. It's going pretty much sideways here. We were looking for that bullish hybrid on the daily time frame. Didn't work out. That's fine. That was a loser. And we're not really doing anything else here. As you can see, there's no reason to do anything else. It's really bouncing along in a pretty narrow channel. Looking at the stock markets, here you can see a second pretty much no action week for the Dow, with another high, well, with a high test or inverted hammer here. Really nothing really doing there on that time frame. But as we did discuss before, we were outside the channel previously on the daily time frame. So folks who are looking to use this as a selection time frame, you may have had a couple of setups to go long. We didn't take any trades, but just looking at the selection time frame, that was doable. But then that also came to an end at about the same time. And we had 1, 2, 3, Wednesday, Thursday, Friday, the market just pulling back, and no big surprises there. It's showing weakness again, so there's no potential at the moment for a valid class 1 W pattern. Who knows, we might see a reversal. So the others looking similar, just a little bit more extreme. So S&P, that's weekly. So there's that high test on the weekly time frame. We're well outside the channel on this one, but again, Wednesday, Thursday, Friday, market just came back. Nothing ready to do there. And again, now on the NASDAQ, which is normally the one we trade, Wednesday, Thursday, Friday, there's that pullback. Was there anything traded here? May have been opportunity to go long here on an H4 impulse. And had you been in a trade, or had you been trading an overlay, then there was a short here as well when we had the breakdown in cyclicity, which signified the end of that bullish wave on the daily time frame. And that would have been a nice winner as well. Oil, so also bouncing around, so people will be happy with perhaps a bit of price relief with last week's bearish impulse candle. But when it comes to trading, these aren't favorable conditions for us. We spoke about a potential bullish resumption beforehand. You can see how the cyclicity is just broken down, and we've got a symmetrical triangle basically over here, which is just phase 2, phase 2, phase 2. So nothing to touch at all. But that will break out. It will break out sooner or later. All right, so Bitcoin, nothing weak last week. So prices still higher than they have been for the last few months, certainly. And here on the daily time frame, these are the kind of pictures that I really, really like because they illustrate the power of our technical analysis technique. So here we've got the HTC channel where we had the breakout, and then the pullback through the course of last week has come straight back to that, what was resistance, now support level, and bounced off of that. And if we look at this on the H4 time frame, we're currently seeing the breakdown in that bearish cyclicity. So it looks like it's already happened. If we get a bullish impulse candle here, for those of you who are trading the cryptos and you'd like the hybrids, then that's definitely a potential bullish setup. Not that that means that we're predicting this will carry on going up, but you've got about a 40% chance of making at least 3 to 1 on that. And that is a positive expectancy. Right, and last but not least, we've got our US Treasuries. I like the 5 years, as you know. So last week, nothing much happening there on the weekly time frame. Still gave us a lower low, so we are very much still in a not only a bearish trend, but a bearish impulse wave or phase 1 wave of that trend. And that's what it looks like on the daily time frame. So we've been trailing. I think we've still got, our entry from all the way up here is still intact. And before close on Friday, we were able to trail the stop to that position. So that's been a very nice trade for us on the daily time frame, just a hybrid on daily. For those folks who are trading this on your funded accounts, you'll have been able to take a short on this morning for a daily impulse. Absolutely. This is a perfect little setup for a daily impulse trade. We had a winner on the daily impulse before. Who knows what will happen with this one, but it's nevertheless an absolutely valid setup. One of the trades I just wanted to point out as well that we had was a nice little class 2 setup for a bearish H4 impulse. I hope I haven't spoken about this already last week, but I don't think so. It was on the 25th of, or 24th. Where did we enter? We entered first thing on the 25th. Beautiful little trade, trailed the stop. This was a nice high reward to risk ratio. If you were using the take profit on this, you would have made about 5 or 6 to 1 on it, which is very, very nice. And had you used the trailing stop, the advanced targeting, you would have made about the same, maybe slightly less in this particular instance, which is a bit of a pity because sometimes these really do fly. All right, and that's pretty much it. So folks, as always, if you've got any questions, drop them into the comments below. If you're enjoying the material that I've put out and you're not yet a subscriber to our channel, make sure that you subscribe and hit that notifications bell and hit that like button. All right, folks, so have a great week trading. Make sure that you sit on your hands if you don't have a valid opportunity. Wait for the market to prove itself, and then Bob's your uncle. I'll chat to you all soon. Bye for now.